Okay, I just want to start by looking at the general market movements this week. For all intents and purposes, it was a really bullish week right up until Thursday evening. But then unfortunately, the news of Donald Trump's illness with COVID really spooked the markets. So we can see S&P 500, Nasdaq and Dow Jones all took hits at the end of the week on Friday. But if we look at the S&P 500 on the 5-day chart, actually it was a green week, starting at around 3334, ending at around 3349. So actually wasn't badly impacted by the news on Thursday evening, whereas the Nasdaq was having a pretty bullish week. Again, if we look at the 5-day chart, started the week around 11,084, actually made its way up to 11,328. The likes of Tesla having a very strong week, but then it took the brunt of the news on Thursday evening and struggled on Friday. I would say the best performing indices was the Dow Jones. Again, looking at the 5-day chart, it was a green week despite the news on Thursday. Started around 27,362 and ended up closer to 2700. It actually closed around 27,683. So, as I say, Monday to Thursday was an extremely bullish and strong week, and then it all came crashing down, particularly on the Nasdaq, because of Donald Trump's contraction of the COVID-19 virus. So that's where we are. But overall, in terms of the portfolio, we have improved slightly. We've had a dollar gain of around $81 from 3,429 to around 3,510 on the week. So let's look at the detail on market beat now. Okay, so looking at market beat, we can see that the portfolio has moved to a break-even position this week. For those with good memories, you can remember last week we were reporting a ROI of minus 2.2. So we have made all of that loss back. So the portfolio has increased around $81 this week back to the original cost basis type level. In terms of the biggest winners, the main change here is Uber and Duke Energy have entered the top 5. McDonald's and Nvidia have gone out of the top 5. So Uber's had a good week, now around 11.9% ROI. Duke Energy had a really big uptick in stock price this week. I think it's reported some good earnings. There's also some rumours of a potential takeover, although I'm not sure on the credence of that news. But CrowdStrike still standing head and shoulders above the rest, plus 25% ROI. Cybersecurity space looking strong and very much needed for the future. Xerox, I really got in at a good cost basis, plus 18% ROI is extremely strong performance. And Domino's continues to produce great results during the COVID-19 crisis. In terms of the big losers, no good news at all in the oil sector. Exxon Mobil still really struggling. Earnings expecting to be substantially down this quarter. Chevron likewise. Walgreens Boots, which is brick and mortar pharmacy, not performing strongly during the epidemic. So they're the big 3 losers. Changes here, eBay's coming in. Something I need to look at in the coming week. Need to make some decisions on what's going wrong with eBay. And Williams Companies, another oil sector company, they did pay a dividend this week, which will come on to potentially reducing the stock price slightly, but they've come into the list. Enterprise Product has left the list, as has Iron Mountain. So that's where we are. In terms of asset allocation by sector, I haven't really made any changes this week. I've only reinvested dividends received, which we'll come on to later. So there's very little change. The only thing worth noting is realty income has gone above 3M in terms of the percentage in the portfolio, and that's because realty's seen some decent gains in share price this week. So that's all there is to say really there. Just moving down the stats. Last week I mentioned I was concerned in terms of portfolio performance versus the general indices. I was concerned that this portfolio is lagging behind, and it suggests I'd be better off just investing in the general indices, which some may argue is true. But I've done a bit more analysis on this because the portfolio isn't a 100% dividend portfolio. I do have some growth stocks in the computer and technology sector. So I just wanted to have a look in more detail at this. I'll just show you this analysis, and hopefully this is interesting. So I started the portfolio on the 3rd of August. Okay, I built the portfolio up through August and early September, but back in August I've taken the indices figures for the three main indices, Dow Jones, S&P 500 and Nasdaq, and I'm looking at how the indices have grown in that period from the 3rd of August to the 3rd of October, or yesterday close. You can see the Dow Jones is up 3.8, S&P's up 1.6, the Nasdaq's up 1.6. What I've done is I've split my portfolio into the dividend stocks and the growth stocks. We can see, yes, the dividend element of the portfolio has lost value, 0.6% down, whereas the growth part of the stock is actually up 3%. So I believe the growth part of the stock, which is about 15% of the total portfolio, is up 3%. So I'm invested in Amazon, Biogen, CrowdStrike, Facebook, Google, Netflix and Uber. So those stocks have performed pretty well. 85% of the portfolio is in dividend stocks, and that's around break even. But don't forget, I am, and we'll come on to this, I am generating a dividend yield of around 3.4%. But if you just look at the dividend stocks, it's more like 4. So overall, I'm comfortable with the portfolio, and I think this graph here doesn't tell the full story of where the portfolio is at. So just quickly moving on, looking at P/E ratio, there's very little change. We had 23.9, it's increased to 24.0. I'm not too concerned. Likewise, beta still 0.97. No change really. The average market cap has increased. Last week we were looking at 231 billion. That's increased to 233.5, which is presumably due to the general increase this week on the stock market. Forecast earnings growth is slightly down from 4.52 last week. But nothing really to be concerned about. As I said, the total dividend yield is 3.4, down from 3.47 last week. Payout ratio is slightly up. We really want that to stay around the same level. Average dividend growth, I believe, is pretty similar to last week. And you'll notice, hopefully, that the annual dividend payment has improved slightly. So last week we were at 119.13. That's gone up to 119.56. That's because I've reinvested all of the dividends I've received this week, and that's had a 0.04% improvement on the total annual dividend payment. Now that might not seem much to write home about, but that's the whole idea of dividend investing. If you keep on reinvesting the dividends, those dividends will grow, and that growth will compound. So that's what it's all about. Just a quick word on dividend yield. Although these figures for Enterprise and Exxon and AGNC look really good, they do cause a bit of concern in the sort of idea that are they going to be sustainable, particularly Exxon really struggling in the oil and gas sector. How sustainable is that dividend yield? Earnings are coming out expected to be 20 to 30% down on the same quarter last year. How long can the company afford to keep paying its dividend? That's a question that we can't answer yet, but it's something that I'm looking at closely. Exxon's reached a share price level where we tend to see support. We need to see the oil price improving. We need to see market conditions improving so that the fortunes of the company can turn around, and hopefully that can happen. In terms of upcoming dividends, yesterday I should have received dividends from Iron Mountain and Restaurants Brands. Those haven't come in yet. They'll come in on Monday. And then next week we're looking at Merck & Co, AGNC, Altria Group, Mondelez and Realty Income. So another decent week expected on dividends coming in. So that's where we're at. So let's now move over to the dividend spreadsheet and see where we are. It's been a decent week. Okay, so in terms of dividends received this week, you can see in total we've received 7 dividend payments. So on the 28th of September, we received $30 after tax from Bank of America. On the 29th of September, we received $79 from William Companies. On the 1st of October, we received $8 from Domino's and $32 from Pepsi. On the 2nd of October, we received $35 from Coca-Cola, and hopefully you've all seen the video I've posted comparing the stocks of Pepsi and Coke and trying to determine which is the best long-term investment. I'll just post a little link down below. And on the 2nd of October as well, I received $69 from First Horizon and $65 from Huntington Bank shares. So all in all, this week we have received $3.18 in dividends. I've reinvested all of those funds back into these companies. Just quickly running through, pretty happy with the position on all of these companies, both in terms of dividend yield and financial metrics. So Bank of America, quick ratio looks decent, close to 1. Net margins are strong. Williams Company, just a little bit concerned about margins. I am going to target a price here. Current price is around $20 and I'm going to target a price of around 23.5. But all the other stocks are holds. Domino's looks really strong. I still think there's upside in the stock. I think this dividend yield is going to continue to grow. Pepsi looks strong, producing some good numbers. It's really expanded. It's not just a soft drink company. It's selling foods. It's performing well in the pandemic. Coca-Cola, not so strong, but I think the dividend yield's there. I'm getting a little bit concerned about the dividend payout percentage. I'm going to start tracking this going forwards, but really impressed with the margins. And these two smaller finance stocks, good dividend yields. I think they're sustainable. Balance sheets look strong, margins look okay, so I'm happy with those stocks. As I said, I've reinvested the dividends. That's having a good impact on the total annual dividend that the portfolio is generating. So that's where we are. There's a couple of dividends still to come in that should have come in on Friday. They'll come in on Monday, and as I've said, there's another decent week to look at next week. So all in all, that's where we are. Just a quick look at the graph, just to show the performance. So in August we received $20 September $12.50. So far we have $2.09 coming in October. I'm expecting that to go to around the $10 level. It's not going to be as strong as September because that's one of the key quarter months coming in. So that's where we are. I hope that's been useful. Stick around for more.